Let me start by saying that my dear friend Adnan has thrown me into a swamp because he's given me a title that says Mergers and Acquisitions Masterclass. First of all, mergers and acquisitions is a subject that will take an entire course, and I certainly cannot give you a masterclass in mergers and acquisitions standing over here. It'll be too theoretical, and I think all of you will become even more sleepy than you probably already are this afternoon. So what I intend to do is the following. I think one learns best when one gets an example of an acquisition, a divestiture, or a merger, rather than gets the theory. We've had a lot of theory. I was sitting over here listening to the valuation subject, which was quite interesting. And I said to myself, Christ, if I valued companies the way I was being instructed to value them on the television, I'd probably be yaw all the time, i.e. I will never, ever be right. And if I'm never, ever right, that's not the way I want to value things. So please bear with me while I tell you about how you ought to do a merger or an acquisition. And please don't forget that in the middle of every merger and acquisition, there is also a divestiture. Somebody is doing a divestiture. So we used to call our department at Nomura the MAD department, the Mergers, Acquisitions, and Divestitures department. So I'm going to give you an example of what an acquisition actually looks like. And the example I will give you is the example of an acquisition I actually did myself on behalf of Nomura, with an entire team, of course, in 2008. Some of you may be able to find some information on that if you go back and take a look at the newspapers of the time, but Nomura International, of which I was CEO, acquired the non-US businesses of Lehman Brothers. Can people please lift a hand and tell me if they remember the name Lehman Brothers, or if they even know the Lehman Brothers franchise? That's pretty impressive. That was 11 years ago, and the institution died in 2008. But I want to tell you about how we did that acquisition, why we did that acquisition, and how that acquisition was completed and then merged into the company, into Nomura. And I suspect that if we go through some detail on that, it will tell you a lot about how mergers and acquisitions should be conducted and why they should be conducted. Adnan gave me a bunch of questions, and I will try and make sure that I answer each of them as we go through this example. So this is 2008. And I am at Nomura, and I have been there already for 8 years after having joined them after 15 years at Credit Suisse First Boston. And we have been looking for those 8 years to change the franchise of Nomura, which is a global investment bank. In Japan, where it originated, Nomura would be considered number one. Even today, it would be considered number one. But particularly in 2007, 2008, it was certainly number one by a hell of a margin. But outside of Japan, it punched way below its weight. Outside of Japan, this institution was considered at best second tier. And for the 7 years that I had been with Nomura, from 2000 till 2007, coming into 2008, Nomura had tried organically to grow into its stature in the world equivalent to the stature Nomura had in Japan. They would hire in people in the fixed income business. If I use any terminology that you don't understand, please lift your hand and I will certainly try and explain it. They tried to hire people into the fixed income department and grow that. They tried to hire people into the equities department and grow that. They tried to hire people into the investment banking department and grow that. They tried what they normally call organic growth. And on every turn, they failed miserably. And the reason institutions like Nomura and others, and I don't mean just investment banking institutions, I mean any manufacturing company, service company, anything you choose to name, fails when it tries to grow organically is because of a fundamental self-selection problem. When you are relatively small, Nomura had 1,700 employees, 1,700 employees in London in 2008. Goldman Sachs had over 12,000. When you're trying to grow from a second-tier position to a top-tier position, and you try to hire people from top-tier investment banks, you either have to pay them too much in order to attract them, in which case they lose the motivation, or you get the guys that you don't really want. And the reason you get the guys you don't really want is because the best guys stay with the number one institution. Now that, by the way, is not unique to investment banking. If you're manufacturing biscuits, the same principle applies. You get second-tier people unless you try to do things in a proper scale way. So the only opportunity we had was to acquire an established business with all the human capital resources that you could find, merge it into Nomura, and blow Nomura's institutional framework out of the water and change it completely into something different. So we tried. For 7 years when I was there, we tried different things. We looked at a company called Houlihan Lokey, which today is a very well-known investment bank, which was in the restructuring business. We looked at Cazenove in the United States. We even looked at Lehman Brothers, but thought it was far too expensive. All of this was done because our vision was that Nomura internationally needed to be a scale top-tier investment bank, because a top-tier investment bank is the only institution that makes money. Second-tier investment banks, second-tier broker-dealers, second-tier banks don't really make money. So right from the beginning, when you consider doing a merger or when you consider doing an acquisition, you have to have your vision right. If you don't get your vision right, you flounder. So we had our vision right, but we could not find the right opportunity. What happened in 2008? In 2008, Lehman Brothers started to have a great deal of difficulty, and in September, they filed for bankruptcy. All of their US and UK businesses filed for bankruptcy, and the international businesses. So now Nomura had to figure out what to do. Nomura could at that point have gone out and hired a whole bunch of advisors to figure out whether we should or should not make the decision to buy Lehman. Well, we didn't do that. We made the decision to buy the non-US businesses of Lehman Brothers on the 15th of September 2008. On that date, we made that decision. But as soon as we made that decision, we knew we couldn't do it ourselves. We went out and we got all the guidance, all the advice we could possibly get in order to make sure that that acquisition did not fail. What was that acquisition? Well, once Lehman Brothers went bankrupt, we had to figure out how are we going to fund this acquisition. So whenever people talk about mergers and acquisitions, people often forget about the fact that you have to finance this damn thing. So how do you fund it? Well, my simple answer was the way I'm going to fund the acquisition of Lehman Brothers was to make sure that I paid nothing for it. How do I pay nothing for an institution like Lehman Brothers? Well, number one, it was bankrupt. Number two, what I did was to make sure that we did not acquire any of the assets of Lehman Brothers during the acquisition that was surplus to requirements for Nomura. We did not need the balance sheet of Lehman Brothers. Nomura did not need the US business of Lehman Brothers because the US business of Lehman Brothers was the business that had the corporate memory of failure. So when you are looking at an acquisition, you've got to be very, very clear about what it is that you wish to acquire and what it is of an institution that you wish to discard. Very often, an all-or-nothing acquisition and retaining all or nothing is not the right answer, which is why I say that mergers and acquisitions is a misnomer. It's mergers, acquisitions, and divestitures. You've got to be able to take new institutions into your company and then get rid of what you don't need. If you don't know how to do that, don't buy the whole thing. it can be a big mistake. So we knew we did not want the corporate memory of failure in the US, so we acquired the UK, the Middle East, the Southeast Asian, and even the Japanese businesses of Lehman Brothers. Nomura was 1,700 people. By the time we'd finished the deal on the 19th of November 2008, it took us about 3 months to do this transaction. We went from 1,700 people in London to 5,200 people, plus 1,300 people in Southeast Asia, plus 2,400 people in India to do the entire back office. So we suddenly went to a scale that was meaningful globally. What did it take to ensure that this acquisition succeeded? Today, the press, if you just look at the press and read Google, you will see that people think that the Lehman acquisition was a, quote, failure. And the reason they think it was a, quote, a failure is because Nomura is no longer one of the top 5 investment banks in Europe. Fair enough. I'm proud enough to say that when I left Nomura in 2011 was the first day it went towards failure. But it did not become a failure because you look at the numbers today. And the strategy was right, and I'll explain why. Nomura's Japanese business, which is exactly why we did the acquisition, Nomura's Japanese business today contributes a much, much smaller proportion of the global revenues and profitability of Nomura than the wholesale international business. The standard stockbroking business in Japan has died a death. Why? Because technology has taken over the standard broker-dealer offices spattered around Tokyo, Kyoto, etc. That business just does not work. Everything is done on this. And Nomura was very, very slow to modernize. Why was it slow to modernize? For the same reason that you often need to do acquisitions in order to bring your country into the 21st century. If you don't, there is an entire spectrum of people within an institution that sit over there, militate against change. It is a natural tendency. They don't want change because they're comfortable in the environment in which they are operating. And unless change happens, this institution does not survive. The Japanese institutions did not change. The international institutions changed and changed dramatically. And as a result of that today, Nomura has an institutional fixed income business globally that is very successful, an equities business that is almost entirely based on electronic transactions, and an advisory business that keys off the equity platform and makes money. Now, it's not the top 1 or top 2, but it's certainly internationally amongst the top 7 or 8 institutions in the world today, all because of one acquisition done in 2008. Adnan wanted me to talk about how these transactions get initiated. Well, you know, I think I've spent a bit of time trying to explain how the Nomura transaction got initiated. But these transactions almost always happen as a result of a failure of an institution to grow organically. And the organic growth suffers not only from the self-selection bias that you tend to get people who are not good enough to do the job, but it also suffers from the winner's curse, so that when you do grow organically, then that business itself is ready to fail because it is in an environment that does not support that one business from growing properly. So the initiation of any transaction starts with a strategic view as to what an institution needs to be in the future. If you do not get that right, no organic growth, no institutional acquisition, no merger makes sense, and it will not work. The whole incentive to get it right goes to hell. Adnan also wanted me to talk about what it takes once an acquisition is done to institutionalize it. And let me go back to the Lehman acquisition to try and explain to you the circumstances under which we operated. So this was a Japanese investment bank, a Japanese culture, which everybody thinks doesn't work in the West. They are completely wrong, but that is what they think. Acquiring an institution which has an overtly American, go-getting, financially motivated culture. So can you imagine merging a Japanese management structure with an American culture, which is a risk-taking, compensation-based culture? It was one of the most difficult things that we have ever done to ensure that those cultures merged. How did we do that? Why were we successful in doing that? And this is something that I find in Pakistan does not really fly very well. And I'll try and explain what I mean by this. We realized that underneath it all, the fundamental incentive structure of individuals within an institution, whether you are Japanese or you are Swiss or you are American, or for God's sake, if you are Pakistani, is the same. Fundamentally, all of us react to the same incentive structure. The only difference is, how do we like getting compensated for it? The American compensation structure for success, the measure for success was identical. The compensation structure for success in a US environment was money, money, and money. In a Japanese environment, it was stature, face, and a bit of money. If you understood that the measuring methodologies for both cultures were identical, just the reward system was different, you knew how to merge them. And if you don't understand how people work and how people think, then the merger does not work. I know very often in Pakistan, I have sat on boards and have advised companies, and very often when I come up with an idea or a thought, I get told, Bahar se aa jate hain, hame sikhane. Yani, this is Pakistan, please don't tell us how to operate because we are different. Well, you know what? We are not different. The standard operating procedures for good business, good governance, and good methodologies to increase profitability are the same no matter where you are. And to the extent that we in Pakistan don't believe that, it is going to be very difficult for us to find the ability to merge and acquire with institutions that enhance our business because we are stuck in a world that says that we are unique. Well, we are not. And I think it is time for us to learn. A merger or an acquisition is a fantastic way to do it. Now, let me say this. No merger or acquisition is perfect. No divestiture is perfect. In fact, there have been a really large number of cases where people or institutions have tried to acquire entire businesses and failed at it. It is not necessarily the case that you must acquire an entire business. Sometimes you have to acquire an entire business and divest yourself of the bits that you don't want. And for that, you have got to have the right thinking on the board level in order to be able to do it, and be very clear that you pay for the services to learn and to be able to stay within the law, within the accounting principles, in order to execute your strategy properly. Now, my final point that I want to make is that the capital structure of a market determines a great deal about how mergers and acquisitions work. A capital structure in the Anglo-Saxon world, which I'm used to, which is where I have grown up and where I have worked all my life, has very, very clear contractual bases for what constitutes equity, what constitutes debt, what constitutes hybrid securities, how these are traded, and what the rights are under each and every one of those. So long as we have a capital market structure which is not conducive to having a proper contractual basis for each of these underlying securities, it is very, very difficult to do mergers and to do acquisitions and divestitures in a country. And Pakistan, I think today, and I leave you with this thought, needs fundamentally to change how its capital markets work in order to be able to do M&A. Why does it need to do M&A? And why does it need to be able to do this kind of institutional mix and match? Because it is the most efficient way to redistribute risk in the capital markets compared to virtually any other. Our capital markets are defined very, very much by private ownership, listing of securities only when, in some respects, we can sell it at the wrong price, hardly any corporate debt in the capital structure of institutions, a lack of trust in the legal frameworks which define how each of these securities gets its rewards. We need fundamentally to change our capital markets. If we don't change our capital markets, our businesses will not be efficient. They will not be able to take advantage of the massive change that is going on around the world and remain ossified. So my last comment to you is, we need to use this lever of mergers, of acquisitions, and of divestitures, which is over and above buying and selling of securities in the stock market, to make our businesses more efficient. In order to do that, law needs to change, practices need to change, and the ability to sanctify contract needs to change. Without any of that, mergers and acquisitions do not work, let alone divestitures. Thank you very much. And I cannot. I should have been Lehman's sister.
No, I'm just quoting from Christian Lagarde's comment that had it been Lehman Sisters, that collapse may not have happened.
Very, very good point, ma'am. And coming from a lady, that makes a lot of sense. You're absolutely right. You're absolutely right. In fact, you could have made a Lee woman, and then it wouldn't have collapsed either, would it?
Do we have some questions?
Sadeq Saab, this morning we asked Dr. Shamshad Akhtar Mahmood Saab was actually doing a fireside chat with her about her famous statement of having just a dozen banks in Pakistan. So how do you see the landscape of banking sector in Pakistan in terms of consolidation or the lack of it? What's your view on that?
Fantastic question, Adnan, but I think in answering it, I'm going to put my foot in it pretty badly. So what the hell, I'll put my foot in it. I know Dr. Shamshad to an extent, because amongst the positive things I did in 2008, I also did one which was emotional. And that emotional transaction was the acquisition, together with my partners, of Saudi Park, which became Silk Bank. And the valuations of Silk Bank, as you well know, and as of most banking systems, particularly Silk Bank, have not been what the valuations of a Lehman acquisition turned out to be. And I remember meeting Dr. Shamshad in her office here, together with my Japanese colleagues, when we were looking to... And she told me, Sadeq Saab, you've got to come and do this transaction, because there are 37 banks in Pakistan, and there will be consolidation. I guarantee it. You know how many banks we have today, Adnan? 37. And this was 2008. So my view is, consolidation is not good just for the sake of consolidation. The fact is the following, and we know that from the Silk Bank and other banks' experience. The reason we need consolidation is because the banking business, because of the regulatory burden on banks today, and I'm not talking just about Pakistan, I'm talking globally, is so large that the banks need to acquire scale in order to be able to reach a degree of profitability which makes them functional. Many of our banks in Pakistan, even at an extremely small scale, continue to remain profitable. The reason they remain profitable is because we have a screwed up capital market structure in this country. And I'll explain why. Very simple nutshell. This is the only country that I know of in the world where the government pays more for borrowing than a bank does. I just don't know about what that is. Every other part of the world that I've been used to, all loans get set off the treasury bill rate. Even LIBOR gets set off the treasury bill rate, treasury bond rate. Here, CIBOR often used to be, I don't know if even today it is below the rate at which the government borrows. So the government crowds out. So if you are a bank, and I remember walking into Mia Mancha's office one day when I was thinking about acquiring a bank in 1998 when I was with CSFB. And he said, Sadeq Saab, why do you want to do this? He says, I come in here, we borrow money from people like you, we lend it to the government, we go home at 1 o'clock. And Mancha is one of the smartest people I've ever met in my life. And that is absolutely right. So if a small bank can do that, it can cover a lot of costs. But then it gets lazy. It is doing absolutely nothing for the capital markets of Pakistan. So our institution of the state bank will need, I'm not sure that it needed in the past, but will need to do things very, very intelligently and very carefully to make sure that our banking system, quote, consolidates, but it consolidates in a way such that the borrowing rates in Pakistan become more normalized. That's the important thing, not just size.
So we have one more question at the back.
From TCS Connector, and my question is not so much about the nuts and bolts of the mergers and acquisitions business. I am more concerned about this great disruption that everybody is talking about, inspired by climate change and global warming. And Ms. Greta Thunberg is up to her protestations. So how do you see this panning out in the near to medium term?
I'm sorry, I didn't get it. This disruption being caused by who?
Climate change and global warming. And they're looking at zero emissions in 6 years. How is all of this going to impact the world of trade, commerce, and industry?
Sir, I am an engineer by training from my undergraduate years, but I think you've gone off into a subject that I may feel qualified to talk about, but I think over a cup of coffee of an evening rather than here, of course it's going to make a lot of difference to a lot of things, and banking and mergers and acquisitions is not the only one. So we'll have a chat later.
Thank you. Thank you for your questions.
Thank you very, very much.